They say that history repeats itself, and obviously when we were dealing with economics, it is very true. We're going to go over to Brazil, which is very interesting, and there is something that has occurred and catalysts that will occur all within this year. I'll show you what I mean. Watch this video. It is very good information, money-making information, if you know how to use knowledge the right way. Before I continue, this YouTube video, just like any of my YouTube videos or anything I say, is not financial advice. I am not licensed to work personally for you. I do not make decisions for you. My information is just my personal information. I'm sharing it, but it doesn't mean that you run off with it. You have to do your own research and you have to decide for yourself. So lately I was looking at the neobanking stocks of Brazil. These neobanks are popular. They're much easier for the masses to understand and use. They give products to the masses that are needed and so on. I was looking at INTR. I was looking at PicS, which is a newly publicly traded company, and then STNE. So I'm looking at the analysts and they're saying things that just didn't make sense to me. For example, INTR, the analysts would say things like, well, they're down year to date because of risks include fierce competition. Okay, fine, but I noticed something. I noticed this trend that all the neobanking stocks of Brazil were down year to date minimum 30%. So I was like, well, it can't be just specific reasons for each specific company. I mean, we're talking about the entire sector. For example, PICS, PicPay Holdings, they would say something like, net margins trail peers, and that's why PicS is down. Or for StoneCo, analysts said, weaker execution in core payments, and that's why it's down. But that's not the case. I mean, sure, these companies have negatives, just like any company, but when you have the entire sector, I mean, come on. INTR is down, what, 31% year to date. StoneCo is down 35% year to date. PicS is down 44% year to date. For me, it's basically this. It's a sector, country, discount. Whenever I have a sector, country, discount, it works. Money maker, big time. There's a specific sector within a country that's on a discount. And that discount occurs because some type of policies have occurred which brought that sector down. Let's look further what caused that sector within Brazil to go down, because if we learn and understand what exactly brought that sector down, then we will have clear knowledge of the why, and then we can take advantage of that why to make money, if you understand what I mean. So I'm going to share that knowledge with you. We're going to go through it, and then I'm going to tell you what I think about each of those stocks and whether they are investable or not, timeline, and so on. Number one key reason why the neobanking sector of Brazil is down is actually because of sky-high Brazilian interest rates. Scary, but towards the end of the video, I have something about that interest rate thing which you're gonna like. As recently as April 29, 2026, Brazil's central bank cut its benchmark rate to only 14.5%, citing uncertain external environment. We'll talk about that later in this video. Number two is political uncertainty, because Brazil has elections, big major elections that are coming up on October 2026 this year. Brazil is headed into a period of renewed uncertainty around its October 2026 presidential election, with Lula's approval ratings under pressure from high food prices and interest rates. So the political uncertainty is key. But what if the political uncertainty were to actually turn out to be good if whoever wins in October 2026 was market friendly? And that's exactly what we see here on Portfolio Advisor. And they had an article about this, very interesting article, but I'm just going to show you one piece of that article. And it says, Macro Matters, Brazilian Markets Brace for Big 2026. They go on to say that, I think if a more market-friendly candidate were to win, Brazil could be one of the best performing markets in the world next year. Brazil's market potential is huge. Those who invested in the 30%, 35%, and 44% currently on a discount neobanks of Brazil have a lot of upside that they can make. minimum 30% gain. Even on the Rio Times, there are articles about this. Brazil stocks slide as election poll and higher for longer rates reset risk. But what if we started to have a cut in interest rates, even the minimum, let's say 25 basis points, but on a consistent basis, let's say every 6 months, okay? So if we start seeing cuts and we see favorable results from the elections, the neo-banking sector will return 30 to 40% to investors. What could bring the sector back? Elections. Look at the elections. Study the elections in Brazil. If you are, if you want to take a bet on this neo-banking stocks, which are actually doing really good, their revenues are sky high for all three. They're growing their revenues each year for the past 5 years. So, the companies are doing very well. They're, getting more customers. They're making more money. They're actually doing really well, right? So we'll focus on, are the elections, what's going on with the elections, basically? Who do you think is going to win? Well, we have to start reading. We have to look into things. The way I see things, after doing a really quick research on the Brazilian elections, and again, they're on October. They're not happening anytime soon, but that's fine. I want to get in early. I see that the election results will possibly be favorable for the neo-banking sector of Brazil. So that's where I'm weighing at. I'm seeing that it's going to be favorable, so I like it so far, and I like to take an investment in one of these three stocks. So what needs to happen is that we need to see a continued rate cuts. We need to see continued rate cuts in Brazil. This is the single most powerful lever. Brazil's central bank has now cut twice consecutively, 25 basis points recently. The next thing is the election clarity, the market-friendly outcome of October 2026. And a timeline summary of all of this is basically the catalyst. So are we going to see continued rate cuts? Even 25 basis point pace is great. Are we going to see a mid-year inflation data improve or not? We have inflation data for Brazil in June and in August of 2026. We have the elections that are going to occur on October of 2026. And we have oil and geopolitical easing or not. This was actually the reason that the Brazilian central bank said that we see an external threat and we have to be cautious in what we do with the rates. And it's basically the Iran war. So that's that. INTR trading at around 579 in pre-market, STNE at 958, and PicS at around 11 bucks. Of the three, to be honest, if the elections are going to turn out favorable for the market of Brazil, and if we have consistent rate cuts, it doesn't matter which of the three. All three are going to go up, in my opinion. They're all going to recover at least 30%. That's my opinion, of course, right? It's not financial advice. Like I said, certain changes need to be made within this year for this turnaround to occur. But eventually, seriously, isn't the neo-banking sector going to change anyways? I believe that all three of these companies may not be at the bottom. I don't know. I can't predict the bottom. But they are near the bottom. And this is a really, really cool investment opportunity. Just my opinion. Let me know in the comment section below. Don't forget to subscribe to my YouTube channel. If you like the information that I present, subscribing, which is free, helps me out a lot. You can also join our Discord. The link is in the comment section below, or you can become a YouTube paid member, which will again lead you to my Discord. I wish you guys all the best and take care.